Hello everybody and welcome back to the channel. In today's video that is going to focus on 3 artificial intelligence stocks. Some of them we are extremely bullish on, we really like them, and the ones that we have selected, as you can see here, is that they are represented in several of ARK Invest ETFs. So obviously ARK Invest is also quite bullish on these companies. The first we have is Baidu Inc., which is represented in the ARK Innovation ETF, in the Autonomous Technology Robotics ETF, and in the Next Generation Internet ETF. It's the second largest holding in the Autonomous Technology and Robotics ETF, and it's one of the areas where people still haven't realized that Baidu may become a major player in the future. Then we have Tencent, which is one of the largest companies in China, a huge multimedia conglomerate. They are represented in all the 4 ETFs: ARK Innovation ETF, the Autonomous Technology and Robotics, the Next Generation ETF, and the FinTech Innovation ETF, where ARK has the 6th largest holdings with 3.68%. Finally, we have an American company, Twilio, which is represented here in the ARK Innovation ETF, 2.43%. They're also in the Next Generation Internet ETF, 2.3%. And finally, they are also in the FinTech Innovation, where they have 2.51% of the weight. So again, ARK is extremely bullish on 3 of these companies, and so are we. We're going to run through them. In this video, we're going to show the numbers, we're going to show the growth, and we're going to show what we think the future may look like for these companies. So to run quickly over what the companies are doing, Baidu is until today known as the Google of China. They provide internet search services primarily in China, and they have a lot of services associated to this, similar to Google, lots of apps, a lot of different pages, like a Baidu Wiki. They have so many things within this areas, and obviously the revenue is coming from advertisements and stuff like that. However, where Baidu is underestimated, in our opinion, is that they are in a transition phase of the company. They're moving over towards artificial intelligence in much larger degree, and one of the areas where they're doing that is on the self-driving services, where they're actually quite far ahead compared to many other companies, and that's something that we feel that the market hasn't really realized yet in the company and the growth prospects around what this can bring to the company. And this is also why it's one of the largest holdings in the ARK Autonomous ETF portfolio. And moreover, they're planning to launch a subsidiary, a artificial intelligence chip firm, which again is going to boost China's effort to develop a domestic semiconductor industry. This is an area where China is not really dominant as of today. You know, we have Nvidia, we have AMD, we have Taiwan Semiconductors that is very much the leading players at the moment, but China is struggling a little bit here, and this is where Baidu is planning to make their entrance with an artificial intelligence chip that is going to be sold to various industries, again including automakers. And again, this is some of the things where we think that the market is still underestimating Baidu. They still see them as this Google of China, but they're actually becoming much more than this. They're investing heavily into R&D, as we're going to see later in the video. And again, we are up more than 100% on this stock so far, and that's also why we are quite perhaps a little bit biased, but we really like the company. Then we have Tencent, which provides, again, a lot of different services, but their primary focus is what they call value-added services and internet advertising services. As we mentioned, there's a lot of companies beneath the Tencent umbrella. It's one of the largest companies in China. They offer online games, they have social network services, they have the streaming companies, as we mentioned with Huya, they have fintech, they have cloud services. They are involved in film and television program distribution. They develop software, they develop online games. I mean, they're quite big. And again, Tencent wants to expand their offerings in the future. They are not in a transition phase similar to Baidu, but they're moving into other areas in terms of artificial intelligence, 5G network. They're going to invest, I think it's around 70 billion over the next coming 5 years to get a grip within the information technology infrastructure in general. So a quite interesting company as well. And what is quite interesting is that they're moving into some of the same areas as Baidu, so they can somehow be seen as a competitor to each other. Then finally, we have Twilio, which is a developer of platform for communications, and they have what it's called the Twilio Customer Engagement Platform. And it's basically a programmable application program that has a set of building blocks that can be used to build the exact customer experience a customer wants. So again, it has some capabilities like SMS, WhatsApp, voice, video, email, and even Internet of Things that can be integrated into how the company wants to engage with its customers. And basically what this enables is the companies will better know their customers, they will be able to better serve their customers, and they will be able to reach their customers through the platform. So again, it's a way for companies to engage with their customers in a more flexible and easy way. And Twilio, again, they have a quite unique platform, one of the best out there as far as we understand. And again, that's one of the reasons why ARK Invest is so bullish on Twilio. So if we take a look at the market cap of the companies, Tencent Holdings is the biggest one with $793 billion, followed by Baidu, only $89 billion, and Twilio have $61 billion, the smallest of the three companies. If we take a look at the graph, they all had an amazing run up through 2020, and since the beginning of the year, they have been struggling quite a bit. They had a big downfall together with all the other tech stocks, and since then they have recouped a little bit. This means that over the last 1 year, Tencent Holdings has returned 70.48% to its shareholders, impressive return, but nowhere close to where Baidu has done, 172.59% return. What is very important to stress about Baidu is that the share price today is very similar to where it was around 2018. So they've actually only recovered some of the grounds over the past years. They've not seen the same extensive growth as some of the other tech stocks have. They have more recovered what they had lost over the previous years. And finally, we have Twilio, which returned the most with 272.35%. Amazing run. So again, here in the revenue, profitability and growth section, if we take a look at the revenue and we compare, we can obviously see the difference between the companies. Baidu has $15.6 billion in revenue per year. Tencent has $65.1 billion. Twilio only in speech mark has 1.7 billion, and when you then compare the revenue of Baidu and Twilio and you see the market cap, you can see that Twilio is not too far away. But from a revenue perspective, they are more than 8 times smaller than Baidu. So quite a difference there. But that also shows a bit the growth that Twilio has seen over the last years in terms of revenue, and where Baidu has been struggling a little bit more stagnant, as we're going to see in a little bit. But still, from a net income perspective, Baidu has returned $3.3 billion, Tencent $17.5 billion. Impressive numbers. Their net margins is 21% and 27%, which is quite acceptable in our opinion. But from a revenue perspective, we can see here that Baidu has been growing over the last 5 years, but not at an extreme high rate. It has been quite stagnant, flat, what they have experiencing, but still growth overall. And that's again what we were trying to mention earlier in the video. Baidu is kind of like in a transition phase, and they are trying to find their growth engine for the future. Then we have Tencent, as we can see here, extreme growth over the last 5 years. It's very important to note that from 2020 they only have 3 quarters, so you're missing a quarter here. So obviously putting above let's say $17 billion on their revenue, that will mean that they will surpass what they've had at least in the last 12 months. So again, growth seen from Tencent, and similar for Twilio. Here it's not really illustrated because the difference is so big from the other companies, but Twilio have had almost a 70 to 100% increase in revenue over the last year or so. So again, tremendous growth from a revenue perspective that is expected to continue in the future. From a net income perspective, we can see here again that Baidu has been struggling a little bit, still 3.3, but they have not seen the same amount of growth as, for example, Tencent has, which has become more and more profitable over the past years. Twilio, again, they are a growth company. They're investing a lot in the future, and that's why they have a big negative result. So they were losing $491 million over the last 12 months, and we therefore obviously need to check how their cash balance is going to be to see if this is sustainable in the long run. Finally, from a growth perspective here, revenue growth next year, Baidu is expected to see 24% revenue growth. Really good, and it's going to kind of like differentiate what they have done in the past 5 years, they are now going to see a more steep increase in revenue, which is again one of the reasons why we are quite bullish on the company. Tencent, respectable 13%. Obviously, when you reach the kind of revenue that they're having, it's difficult to keep the same high revenue growth rates, but in terms of billions, it's obviously still quite significant. And Twilio, 37%, which is also quite good, but not as good as they have seen in the past years. Earnings per share growth rate for the next 3 to 5 years, again, all of them are expected to increase significantly. Twilio 94.1%, very impressive. And again, 23% on Tencent holdings. When you see how they have done in the past years, this is just really impressive, and it just shows how strong the company is in general. And that's also why it's one of our favorite companies out there in the technology space. From a return metrics perspective, I don't think we should spend too much time actually, because overall Tencent Holding is by far doing the best of the companies, followed by Baidu and Twilio. But again, we need to take the context of the numbers that we just saw before. So again, there's no huge surprises here, nothing that really concerns us. We would say the only thing is we would like to see a higher free cash flow yield from Tencent Holdings and Baidu, but this could obviously also be reduced a bit because they're investing so heavily in the future. So again, we want to take that with a grain of salt, but it's not impressive free cash flow yield for sure. On a shareholder yield, Baidu had a buyback yield of 1.4 over the last 12 months, and Tencent had a small dividend on 0.2%. Twilio had 0, which is obviously expected as they're a growth company, so really nothing noteworthy to mention here as well. And again, if you're a dividend-oriented investor, obviously you're not looking for this type of companies. Now we come to the balance sheet, and obviously first we want to take a look at Twilio, because we saw that they have been losing around 500 million in the last 12 months. They have a cash and short-term investment of $3 billion. So again, no huge concern as to whether they will sustain their losses. As long as they just become more profitable, which is expected as we saw earlier, then that's fine for us. And again, we are quite comfortable with Twilio cash position and general balance sheet. As you can see across the board, have really strong solid numbers, the low debt equity. So again, nothing really that is concerning us. Tencent Holding as well, strong solid numbers. They have 35 approximately $1 billion in total cash and short-term investments. So again, they have cash at hand to grow their business. They don't have 70 billion, which is what they're needing for the coming years, and that's why, for that matter, I believe they issued some bonds last year to fund that growth. But again, they have a strong balance sheet, nothing to be worried about. Similar with Baidu, we saw before they are around an 81 or $89 billion market cap that they're having, and they have $25 billion cash at hand that they can use into disruptive technologies. They can use it to go into innovation in the AI segment. They can use it for the autonomous driving. They can use it for the AI chips that they are going to make. Again, the company is in a very good position to fund the growth that they're expecting to have. So again, strong balance sheet for Baidu, which is really good to see. From a research perspective, we unfortunately only have the numbers for Baidu and Twilio. We do not have the ones from Tencent, but what we can read is that they're spending more than $3 or $4 billion a year on R&D, so they're definitely not laying on the low side. But as we can see here, both with Twilio and Baidu, an increased number of money is being allocated to R&D expenses. So again, it's just really important to stress that these companies are investing for the future. They don't want to be disrupted. They want to be the disruptors. And again, when you see that, Twilio had a negative result of around 500 million, but they're spending more than 500 million in R&D per year. Again, that just gives a much greater comfort that they will become profitable at a certain point once the revenue starts picking up. So again, no huge concerns at all. It's looking great from an R&D perspective with these companies. From a valuation perspective, if we first take a look at the forward P ratio, what we can see is that it's decreasing slightly for Baidu and quite significantly for Tencent, which implies that earnings is expected to increase for the companies, which again, no surprise from what we have seen from the projections going forward and how the companies have delivered over the past years. Baidu has been obviously a bit more in a stagnant phase, but Tencent Holding has been going up for a long time. Twilio has a negative forward P ratio, which indicates that they're expected to lose money in the coming 12 months. months, no surprise there. And again, not really a huge concern to us, as the company has demonstrated that they can grow quite significantly. From a price to sales ratio perspective, all companies are not low. It's not that they appear that cheap from this ratio, but we think it's quite okay for Baidu specifically, considering the growth that they may experience in the future. Tencent actually also quite okay from what we have seen so far, and Twilio is also acceptable when you see the revenue growth that they have been seeing. And obviously, if the share price remains more or less constant, this number should go down quite significantly, quite fast. Our own estimated intrinsic value upside on this company is quite significant just in the short term. For the ones who have followed our channel quite regularly, you will see that we in general do not really hype stocks. We are perhaps a bit more conservative. But these three companies, we really like them. Specifically Baidu, we see a 29% upside in the share price just over the next 12 months. But looking beyond that, just a few years ahead, we think that this could be a multi-bagger stock that could return you several 100%. We think it's a good time to get into the stock. We think that they have very good outlook. So again, we have great expectations for them. We really like the stock overall, and it has done really well for us so far, and we think the things that the company is doing is extremely good. So from the short term, 29%, but long term, massive growth could happen for this company. Similar with Tencent Holdings, we don't think this will be a multiple bagger, but we think at least 25% upside is reasonable over the next year or so, and also in the long term, if they can continue on the growth journey that they are on, expanding their business offering, and again penetrate the existing markets even further, it will be good. We know for the Chinese companies that at the moment there is some uncertainty again on around the Communist Party, who wants to take a bigger control or have more control over the tech companies. We think this is a temporary thing that will be solved over time and shouldn't have a huge influence. Again, the Chinese government want these companies to grow in the end of the day, so we think that will be solved, but it could be that there's going to be a little bit turbulence ahead in the coming months. Who knows? But a long-term perspective, both of them are extremely good. Finally, we have Twilio. Again, we also really like their growth outlook. We only see an 18% upside, but that's also because the share price have increased quite significantly, and we could be a little bit in doubt as to how it plays out in the coming year or so. So again, we are perhaps a bit more conservative in our estimates with Twilio than with some of the others where we have a bit more comfort. But we would say with Twilio, if they manage to deliver on the growth targets, this will also be a multiple bagger. It could return you several 100%. Again, we don't want to hype anything, but that's just what we are seeing with the company. It may not be next year, it may be in 2-3 years, but we definitely think it could happen, and we therefore think that you should consider as an investor to take a position in them. From a book value indicator, all of them appears overvalued, and relative strength index, again, no clear indication as to whether they will go in an uptrend or downtrend. They're kind of like in the middle range. Finally, we have the analyst recommendation, and as we can see from the ratings breakdown, there's a lot of analysts that is bullish on all the stocks. 14 buys on Baidu, 9 buys on Tencent Holdings, and 22 buy ratings on Twilio. From a price target upside perspective or downside, they see a downside potential of 5% of Baidu, which we are quite surprised about, to be honest. Tencent Holding, only a 3% increase potential for them. Again, that's also surprising to us. And a 23% upside to Twilio, which is more aligned with what we are seeing at least. We think they're a little bit negative towards Baidu and Tencent Holdings. We don't know if it's because it's Chinese companies or they don't understand them, but again, we think that they're a bit pessimistic about them. So just to wrap up, if we look at the trend of the stock, Baidu is more on a downtrend sideways kind of thing. Tencent Holdings definitely in a sideways, and Twilio is in a similar one. If we take a look at the net income, 2 of them are positive, Twilio is negative. That is obviously also reflected in the net income market, where Tencent Holding is doing the best. If we take a look from the revenue trend, all 3 companies is in a growth, and an earnings trend perspective, Baidu is a little bit stagnant, where the others are definitely in growth. But as we have said many times, looking ahead, we think that Baidu is definitely going to move into growth from an earnings perspective as well. Return on equity, return on invested capital, free cash flow yield, and shareholder yield, Tencent Holding overall by far doing the best. No surprise there that Twilio is doing the worst, but we need to take all the things into consideration when we're looking at these numbers. Twilio may be negative today, but from a growth outlook, they definitely look to be in a prime position, and Baidu across the board delivering quite acceptable numbers, with the exception for Tencent and Baidu on the free cash flow yield, which we would like to see a bit higher, to be honest. From the balance sheet perspective, it's looking fine across the board. Nothing to be worried about. Twilio has cash to sustain their growth and the losses that they're experiencing. Baidu has an extreme good cash ratio of $25 billion out of such a small market cap. It's quite significant, and they have a lot of money that they can put into the investments that they think can grow the company further. So again, across the board, no worries in the balance sheet with any of the companies, and obviously no surprise here, all of them are undervalued in our opinion. And that takes us to the final verdict of these stocks. Really like all the stocks, no surprise there, I guess. Baidu recommended company is in a transition phase. New business area can skyrocket the value long term. And again, we therefore think that they're significantly undervalued. Similar with Tencent Holding, they're a major player within several sectors. They're investing heavily in the future, and the expansion of their business areas will fuel the growth in the future. So again, we also really like Tencent. And finally, we have Twilio, massive revenue growth, also investing heavily in R&D. They're not profitable, but that will come with time, no doubt about it, in our opinion. So again, we would definitely also recommend that. That was all we had for today. Please keep in mind that we are not professional financial advisors, and this is only done for entertainment purposes. You need to do your own due diligence before taking an active investment decision, especially with these companies. We know that we seem a bit hype-ish, or we are very bullish on them, but that's just the truth of the matter. So again, but you need to make sure you do your own due diligence before you take an active investment decision. Please subscribe for future content we send out quite regularly. Please give us a like, it really helps with the algorithm. And please leave a comment in the comment section. What do you think of these 3 companies? Which one do you think will be the best in the future? Besides that, there's not much more to say. Then stay safe, have a nice day. Hasta la vista, baby.